Good morning, my YouTube friends. My name is Adam Kahn, and I'm the Rational Investor. Today is Sunday, January 14th. I hope you're all doing well. And what do we do on Sunday? We go over the portfolio that I opened for you guys on YouTube. We put $10,000 into it. This day is week 8, and we're going to go over the portfolio, and hopefully you find that interesting. So happy Sunday. I hope you're all enjoying your weekend. Still a little bit chilly here in Vegas, but not as bad as it has been. We're going to go over the portfolio, but before I do, if you could do me a favor, if you haven't already, could you hit that subscribe button, possibly smash the like button as well? I really appreciate the support. It helps YouTube's algorithm, which I'm sure you all know, and it helps other people find the channel. So if you're finding the information useful and helpful, I really appreciate it getting out there and other people being able to find it as well. So this week, instead of going into detail into each and every stock, I'm just going to rattle through them, let you know what the portfolio did overall, and I'm also going to go over who the biggest winner was and the biggest loser was. If you guys want me to go into the details, feel free to make the comments, but I've been doing it every week, and I think it's probably a little much for those of you who watch each week. You're probably more interested to see how it's done. Now, keep in mind, the main reason I did this was to show that investing is not scary and how simple it is, and really that anybody can do it. And I really mean that. You guys know where you shop, you know where you go, what you like, what you know about, and all of those things are companies. There's no reason that you can't pick them and do these types of things for yourselves as well. Now, also keep in mind for covering my butt, whatever else, this is not financial advice. I mean that seriously. Everybody needs to make their own financial decisions for what works for them. Even if something works for me, that doesn't necessarily mean it actually works for you. So whether you seek a financial advisor or do it yourself or however you make those decisions, just look at this stuff for entertainment purposes. I'm just sharing my information. I hope you find it interesting, and we'll get into the portfolio. So I'll rattle through the stocks. We have 6 shares of ADM, Archer Daniels Midland. We have 4 shares of Amazon, AMZN. We have 8 shares of Best Buy, which is BBY. We have 10 shares of Bristol Myers Squibb. The ticker is BMY. We have 2 shares Caterpillar, CAT, 5 shares Enphase, ENPH, 22 shares Foot Locker, ticker symbol FL, 4 shares of Google, GOOGL, 2 shares of Meta or Facebook, META is the ticker symbol, 5 shares of 3M, ticker symbol makes sense, it's MMM, 11 shares of Altria, which is the American version of Philip Morris, ticker symbol is MO, 20 shares Nextera Energy Partners, ticker NEP, 20 shares Pfizer, ticker PFE, 25 shares Virtus Infracap Preferred Stock Fund, ticker symbol is PFFA, 4 shares of Qualcomm, QCOM, 7 shares of a restaurant group that includes Burger King and things like that. I forget what they call themselves. I know they have Tim Hortons and some others in there as well. Their ticker symbol is QSR. 5 shares of Starbucks, SBUX. 2 shares Tesla, which is a little bit new to the portfolio, TSLA. 4 shares ExxonMobil, XOM, and we have 10 shares of Zillow, ticker symbol Z. As I learned recently, they also have another ticker, which is ZG for Zillow Group. They're both the same thing, one has voting rights. So anyway, I'll go over how we did for the week. I'll go over the biggest winner, the biggest loser, and maybe chime in about a couple of them. So this week we were down $45.95, which I actually am pretty excited about. When PPI and CPI came out, I guess in reverse order this week, the market really tumbled a good bit. And this goes to show what I'm saying about a well-diversified portfolio and really even bad weeks not being so bad. To be down 45 or $46 in an account in a week that was like this week really is performing quite well, and I'm really happy with how it did. And the interesting thing is one of the stocks in particular was a majority of the loser. So if you spread out and you have good companies, I really think in the long run you do better than putting it in a bank account or things like that. Our total profit so far over the 8 weeks is $814.34. That's still way above what it should be or what I would expect. I hope that I get 10% a return a year. And it doesn't work in a perfect straight line. And sometimes you do better. Obviously, I always hope to do better, but I think realistically, 8 to 10% is pretty reasonable. And some years you're going to do worse, and you're even going to have some periods where you do terrible. It's just part of the ups and downs of the markets. But again, spread out, have some companies that are boring and safe and tend to do well in bad economies, and mix some other stronger ones that might have some good growth potential and see how it goes. So the biggest losers in the account so far are Starbucks and Tesla, two companies that I still love. The interesting thing is I've only had Tesla for 2 weeks, but the timing was pretty bad for when I bought the two shares. It's dropped dramatically. They had some news that something about the Red Sea closing down one of their plants, and the stock fell a good bit. As a trader, and again, you have to make your own choices. This area around 220 where it got to, I think it closed at 218 and change, is a good area to take a shot and pick it up. It really might have more room to run, and they have earnings come out shortly, but it seemed to bottom out there previously before it went up to like 250, 260, and now it's back down there again. Sometimes stocks just get into these channels where they stay there for a long time and look real scary at the bottom and look all exciting at the top. I don't know that Tesla's going to do that, but it's interesting timing with the earnings coming out and everything else that it looks so scary. And again, maybe it's a good place to put on a little bit, maybe it's not. But I try to find things like that in great companies when I look to buy. Starbucks, I don't know if I said how much. We're down $57.32 in the 2 weeks. Starbucks, we've had all 8 weeks. We're down $57.65. I love Starbucks. I'm hoping this year's their breakout year. Their last quarter's earnings were actually excellent, so I've been pretty surprised that the stocks really had a tough time. Uh, I guess we'll see how it does in the future, but really, I buy most of the things like this to own for 5 or 10 years. So if it's down a little bit over 8 weeks or even 6 months, it's just not the end of the world. And Starbucks hasn't done so great over the past couple of years. I still love the company, so what's the difference? Our biggest gainer overall so far has been Foot Locker and Zillow. On Foot Locker, we're up $142.92, and it's one of the ones that I'm so glad. Actually, both of these, I'm glad that they're the ones that are doing so well, because these are like my shots for hitting a home run type of stocks. My hope with Zillow is they take an actual market share of the real estate market. And Foot Locker I got into because of the CEO, which I talk about every week. Her name's Mary Dillon, and she did real well with Ulta Beauty, and I hope she has some vision with Foot Locker as well. So the best performer this week is actually my largest holding personally outside this account, which is Meta or Facebook. It was up $44.18 this week, which I'm thrilled. And it's an interesting one, kind of like Caterpillar. We only have two shares. So when you look at a stock and think that, geez, that stock's expensive, it may or may not be. It's based on its price to earnings ratio, not the cost of the dollars to buy a share of stock. I know people sometimes think, ooh, it's $300, that's expensive. But really, you have to look at the market cap and how much a company earns in terms of its valuation and whether it's expensive or not. The price of the stock is almost irrelevant. I mean, obviously, it's not. You want to buy low and sell high. But you can buy a smaller amount of shares and have the same investment. If you put $500 in Meta, it's $500, the same as it is as if you bought 50 shares of a $10 stock. So I wouldn't overthink it's expensive or not expensive. And the worst performer this week is also the one that's the second worst total in the portfolio, which was Tesla, which I've talked about a bit, which was down $37.02. So again, I'm still thrilled with the portfolio. I have no issues with any of the stocks. I kind of wish I had sold the Enphase. I know I mentioned I really don't know a ton about the company. I bought it because I put solar in, and I don't have Microsoft in here, and I don't even have it as one of the ones in my safe. And it's a great company, and there's some others like that that I find if you just pick what's best, you tend to outperform and not overthink it. Don't worry about if I'm buying it too expensive today or if it's a great deal or whatever else. I find people get intimidated and scare themselves out of doing this stuff. Anyway, I'm going to keep it short. Like I said, if you want me to get into details about all the stocks ever, just let me know and I'll do that. Tomorrow, I'm probably going to do one. Somebody had asked if I could do a video on the stocks that I put in the safe deposit box. It might be a little bit longer. I have about 20 or 25 stocks that I really just set them and forget them and don't even pay attention to. So don't forget, do me a favor, hit that subscribe button. If you've made it this far, do a shout out. Be like, buddy, I made it that far. I can't believe I made it through the whole video. And thank you guys. I love seeing the channel grow. It's super cool. Hit that like button. We're at like 2,800 subscribers. I'm really happy. So thank you. Have a great day, and I'm sure I'll talk to you tomorrow.